The Nightly Business Report.
Good evening. Tonight, the Maha pumped storage hydropower project, which is being advanced by the Ceylon Electricity Board, will be Sri Lanka's first water battery. In contrast to the strong increase seen in the early and second half of last year, the Port of Colombo has a rocky start to 2025, as tranship container volumes fell despite ongoing congestion. Following 2 days of falls, the Colombo Stock Exchange ended the week on a positive note. Notable increases in the S&P SL20 and all share price index both indicated a market recovery. And the Dow fell 1%, while the S&P 500 and Nasdaq both had losses of less than 0.5% as US stocks dropped off.
From Studio 24, here's Sanuvi Mudanayaka.
Good evening and thank you for joining us. The Ceylon Electricity Board is advancing with the Maha pumped storage hydropower project, marking Sri Lanka's first ever water battery. This groundbreaking initiative aims to revolutionize the country's energy sector by providing efficient and sustainable energy storage solutions.
The Ceylon Electricity Board is moving forward with the Maha pumped storage hydropower project, Sri Lanka's first ever water battery. The 600 megawatt initiative will store excess solar and wind energy, ensuring grid stability and supporting the country's goal of achieving 70% renewable electricity by 2030. Located in Aranayaka and Navalapitiya, the project is set to reduce the country's reliance on fossil fuels and cut down carbon emissions. The large-scale energy storage system will play a crucial role in stabilizing the national power grid. CEB is seeking international funding to minimize the potential tariff impact on consumers. The project is also expected to stimulate economic growth and create job opportunities across the country. By focusing on renewable energy and storage solutions, Sri Lanka is taking a significant step towards environmental sustainability. Once completed, the project will be a key component in the nation's renewable energy infrastructure.
The Port of Colombo began in 2025 on a shaky start as transshipment container volumes declined amidst persistent congestion, marking a contrast to the robust growth experienced in the first and latter parts of 2024. The Port of Colombo faced operational bottlenecks in January 2025, primarily due to increased Sri Lanka customs inspections, which led to a 6.5% year-on-year decline in transshipment volumes. Despite strong performance in early and late 2024, when the port benefited from Red Sea disruptions, total container throughput dropped 4.8% compared to the same period last year. The Colombo International Container Terminal saw a 10.9% decline in container handling, while the South Asia Gateway Terminal reported a 21.6% increase. The port is set to expand with the West and East container terminals expected to improve capacity and reduce congestion by the end of 2025. The government has allocated 2.5 billion rupees to enhance the port's efficiency and competitiveness. Despite these challenges, the port saw a 0.6% increase in ship arrivals and a 37.1% rise in domestic cargo handling, particularly containerized imports. However, dry bulk cargo handling fell sharply by 50.9% due to reduced imports of cement and wheat. Sri Lanka's government plans to boost the contribution of the small and medium enterprise sectors to national exports, aiming for a 12 to 15% share in the next 2 to 3 years. Despite accounting for half of the country's GDP, the SME sector currently contributes less than 4.4% to export revenue. Export Development Board Chairman Mangala Vijay Singha highlighted the government's efforts to scale up the medium and micro categories with plans for significant development activities. The government has allocated a record 20 billion rupees in budget 2025 to support the SME sector and will establish new industrial zones in Maha, KKS and Trincomalee. Additionally, under the 5-year National Export Development Plan, Sri Lanka aims to increase merchandise exports to $27 billion and service exports to $8.5 billion. The EDB will focus on market surveys to identify potential markets, aligning products with the market situation for better export outcomes. The Ceylon National Chamber of Industries launched the CNCI Achiever Awards 2025 at Cinnamon Grand, Colombo. It marks the 24th edition of the awards, recognizing excellence in industrial performance across various sectors.
The Ceylon National Chamber of Industries launched the CNCI Achievers Award 2025 at Cinnamon Grand Colombo. The chief guest for the event was Mrs. Tilaka Jayasundara, Secretary of the Ministry of Industries and Entrepreneur Development. This marks the 24th consecutive year of the award ceremony, which aims to recognize and reward industrial excellence in Sri Lanka. The award scheme evaluates companies on factors such as quality standards, productivity, corporate planning, research and development, employee benefits and labor relations. Social and environmental responsibilities are also a key criteria for assessment. The CNCI Achiever Awards are open to business of all sizes from extra large to micro categories, with competitions at both national and provincial levels. Additionally, state-owned organizations are invited to participate in the government sector category.
Sri Lanka's tea exports in January 2025 totaled 19.37 million kilograms, reflecting a growth of 0.61 million kilograms from January 2024. This increase was driven by strong performances in tea packets, tea bags and instant tea, while bulk and green tea exports declined. The free on-board price for January 2025 was 1,722.78 rupees per kilogram, down by 26.14 rupees from the previous year. But the FOB price in US dollars saw a slight increase of $0.38. Iraq remained the top importer of Ceylon tea, with imports rising 21% to 3.02 million kilograms. Libya saw a remarkable 406% increase in imports, reaching 1.68 million kilograms, while Russia, the second largest importer, experienced a slight decline. The shifting dynamics in key markets highlighting the evolving global demand for Sri Lanka's tea. Let's take a short break now. This is Nightly Business Report. Welcome back to the Nightly Business Report. The Colombo Stock Exchange closed on a positive note at the end of the week, following 2 days of decline. Both the All-Share Price Index and the S&P SL20 indices saw notable gains, signalling a market rebound. For further insights, we speak with Manusha Kandanarachi from First Capital Holdings.
Thank you, Sanuvi. After 2 days of losses, the Colombo stock market rebounded with positive sentiment and low market activity, ending the day in green. The All-Share Price Index also closed the day in green at 16,889, gaining 30 points, marking a 0.18% increase from the previous day as well. S&P SL20 index also rose by 30 points, reaching to 5,063 today. During today's trading session, most of the investor attention was focused on banking sector stocks. The most significant contributors towards the positive index were Commercial Bank, Melstar Corporation, John Keells Holdings, NDB Bank and Sampath Bank. The lack of crossings present in today's market demonstrates decreased participation from both institutional and high net worth investors. Additionally, banking sector stocks contributed significantly to the turnover, playing a key role in the overall market as well. Meanwhile, turnover stood at 3.5 billion rupees, marking a decrease of 36.6% from the monthly average. Moreover, the banking sector led the turnover by 57%, followed by the capital goods and material sectors, jointly contributing 22% of the overall turnover. Thank you.
The market began on the week on a positive note, despite the SPI showing some decline and the S&P SL20 continue its decrease over the past 2 days. However, as the week progressed, the market regained strength, closing on a high with increasing momentum. For further insights, we speak with Ranjan Ranthunga from First Capital Holdings.
Thank you, Sanvi. During the week in concern, we saw the SPI dipping by 0.3% or 48 points, while the S&P SL20 saw a gain of 0.7% or 35 points during the week. Meanwhile, the turnover dipped towards the 4.2 billion mark during the week, while the average turnover for the month was at around 5.1 billion. Upon this, the Colombo bourse saw a bit of profit taking during the week under review, where we saw there was a profit taking on banks, mainly due to the good results and the strong dividends that were reported by the banks for the December quarter. Moreover, with the announcement of the budget 2025, which was much awaited, and the first budget of the newly formed government, we saw much needed direction for the market. However, due to the fact of the extended profit taking, we saw investors on the sideline awaiting for the revival of the market. Meanwhile, amongst the top turnovers, we saw banks topping the top turnover list, with Commercial Bank, Sampath, HNB among the top turnover generators. While in terms of capital goods, we saw JKH dominating turnover as well. Then looking at the foreign activity, we saw a net foreign outflow of around 339 million for the week, making the year-to-date outflow closing out on 8 billion rupees for the year. Meanwhile, looking at the valuations, the Colombos continue to remain fairly valued at a PE of 9.3 times, while the PBV stood at 1.2 times as end of today's closing. Thank you.
Gold prices edged lower today but remained on a course for an 8th consecutive week of gains. The decline was driven by a 0.3% drop to $2,931.19 an ounce, following an all-time high of $2,954.69 yesterday. The metal continues to be supported by strong safe haven demand, fueled by concerns over US President Donald Trump's tariff threats. So far this week, bullion has added more than 1%, keeping its positive momentum intact. Gold is on track for its longest weekly winning streak since mid-2020. Oil prices remained largely steady in Asian trading today, on track for their best week since early January. Supply disruptions continue to support the market despite a slightly higher than expected rise in US crude inventories. Brent oil futures were flat at $76.45 per barrel, while West Texas Intermediate crude futures held steady at $72.28 per barrel. Both contracts are set to rise by nearly 2.5% this week. This would mark their strongest weekly performance since early January. The ongoing supply concerns continue to provide upward momentum for oil prices. The Sri Lankan rupee has remained steady against the US dollar today, showing no significant change compared to yesterday. According to the Central Bank of Sri Lanka, the buying and selling rates for the US dollar are stable. Let's now take a closer look at how the Sri Lankan rupee is faring against other major global currencies. A short break now. This is the Nightly Business Report. Welcome back. Amana Bank has received a BBB+ rating from the Lanka Rating Agency, reflecting the bank's stable financial outlook and strong market position. For further insights, we speak with Imran Iqbal, financial analyst from Lanka Rating Agency.
Amana Bank has been rated BBB+ by Lanka Rating Agency, reflecting its good creditworthiness. As a rating agency, our responsibility is to provide an independent opinion on the creditworthiness of the entities. It is important to clarify that we do not promote or endorse any investments, but instead offer an objective assessment based on our methodology, which consists of both qualitative and quantitative analysis. Creditworthiness in the context of an entity or bank reflects its ability to meet financial obligation in a timely manner and sustain confidence among stakeholders. A bank with a strong credit fundamental is typically regarded as resilient to economic fluctuations and capable of maintaining long-term financial stability while fulfilling its commitment to depositors and creditors. Amana Bank's rating reflects strong asset quality, strengthened capitalization, sustained growth and performance over the years when compared to other banks in its category. Amana Bank is licensed and operates as a fully fledged Islamic bank in Sri Lanka, the only bank in this space. The bank draws strength and strategic guidance from its financially sound corporate sponsor, Islamic Development Bank Group, with over 28% shareholding. The bank has relatively low ADR of 72% but maintains robust asset quality, with non-performing loan ratio of 3.9% in September 24, well below sector average. The capital adequacy ratio and Tier 1 were recorded at 18.1% and 15.4% respectively. In September 24, implying adequate capital buffer after completion of the recent rights issue, the bank posted profit after tax of 763 million during September 24, and it is expected to sustain its profitability. In conclusion, our BBB plus rating signifies the good credit quality of Amana Bank, and we will continue to monitor it closely. Any adverse impact or capital-related regulatory ratios or deterioration in the asset quality can impact the rating opinion.
Slim Brand Week 2025, hosted by the Sri Lanka Institute of Marketing, is set to redefine Sri Lanka's marketing landscape. With 28 international and local speakers, the event aims to foster innovation and collaboration in the industry. HMB PLC joins as a platinum sponsor, supporting the initiative and emphasizing the vital role of marketing in economic growth. International speakers include Jordan Belfort, Neil Patel and Professor David Acker, offering insights into sales strategies, digital marketing and branding. The event will cover topics such as brand inspiration, sales execution and media innovation, showcasing local brands that have disrupted their markets. Slim President Gayan Pereira highlighted the event's potential to drive creativity and progress within Sri Lanka's marketing sector. The new Range Rover was unveiled in Sri Lanka at the Shangri-La Hotel, Colombo, showcasing modern luxury with unmatched refinement and personalization options. Celebrating 50 years as the original luxury SUV, it blends comfort, capability and cutting-edge technology for a truly sophisticated driving experience. The new Range Rover, marking 50 years of luxury SUV innovation, combines modern design, technological sophistication and exceptional capability. It offers efficient hybrid powertrains, including mild hybrid, plug-in hybrid and soon a pure electric version. Available with 4, 5 or 7-seat interiors, the Range Rover adapts to various environments with standard and long wheelbase body options. CEO Thierry Boreau praised the vehicle as a superb example of Jaguar Land Rover's vision to create the world's most desirable luxury vehicles. Built on the new modular longitudinal architecture, the SUV ensures agility, capability and refinement. The extended range plug-in hybrid powertrains offer impressive CO2 emission below 30 grams per kilometer and an electric driving range of up to 100 kilometers. Available in SE, HSE, Autobiography and First Edition models, the new Range Rover offers unrivaled luxury and personalization, with the SV model delivering an exquisite luxury experience. The Commercial Bank of Ceylon has been recognized for its excellence in sustainability reporting at the 2025 Sustainability Reporting Awards by the Association of Chartered Certified Accountants. The bank's 2023 annual report was named the overall runner-up across all categories, while also winning the top honor in the banking category, repeating its success from 2022. The ACC Awards highlight the bank's comprehensive disclosure of sustainability-related information, acknowledging its commitment to economic, environmental and social sustainability. Additionally, the report won 2 golds, a silver and a bronze at the CS Sri Lanka Tax Awards 2024, excelling in areas like corporate governance and digital transformative reporting. Titled In Context, Navigating Storms Together with Conviction, Courage and Empathy, the 2023 annual report is GHG neutral and showcases the bank's strong governance and performance. Commercial Bank's consistent recognition underscores its leadership in financial reporting, sustainability and innovation in the banking sector. DHL Express has been ranked number 1 globally as the world's best workplace, leading regions in Asia, Latin America and Europe for multiple years, according to the Great Place to Work and Fortune magazine.
For the 5th consecutive year, DHL Express has been named one of the world's best workplaces, securing the top global ranking. The company also claimed the number 1 position in regional ranking across Asia, Latin America and Europe. DHL Express has maintained its full leadership in Europe for the 4th year, in Asia for the 8th year and in Latin America for the 7th year. This recognition was awarded by the Great Place to Work in collaboration with Fortune magazine. CEO John Pearson expressed pride in achievement, emphasizing the company's commitment to putting people first. He highlighted DHL Express' inclusive culture and the importance of their certified international specialist program in driving excellence. With a global team of 120,000 employees in over 220 countries and territories, DHL Express remains focused on fostering the best work environment. The company's dedication to employee satisfaction is a key factor in delivering exceptional service worldwide.
Singer Sri Lanka was honoured to be named the official furniture partner at Architect 2025, a prestigious event organised by the Sri Lanka Institute of Architects. The exhibition held at the Kingsbury Hotel in Colombo showcased the latest in architectural design and innovation. Janmesh Anthony, Marketing Director of Singer Sri Lanka, expressed the company's excitement about the partnership, emphasising their commitment to enhancing the architecture and modern living spaces in Sri Lanka. Through ongoing innovation, Singer Furniture offers complete solutions to transform any home. Additionally, Singer's collaboration with Signature Group from Malaysia brings international kitchen craftsmanship to local consumers. Attendees were invited to explore Singer's refined designs and craftsmanship at their stall during the event. Let's take a short commercial break. Global business updates coming on the other side. This is the Nightly Business Report. Welcome back to the Nightly Business Report. Asian stocks traded within a narrow range today as concerns over US trade tariffs and prolonged high interest rates weighed on sentiment. However, strong earnings from e-commerce giant Alibaba ignited a fresh rally in Hong Kong. Japanese stocks remained flat following January's stronger-than-expected consumer inflation data, which fueled expectations of further interest rate hikes by the Bank of Japan. Alibaba shares surged 8.5% in Hong Kong after the company reported better-than-expected earnings for the December quarter, boosting the Hang Seng Index. Meanwhile, Japan's Nikkei 225 and Topix indexes showed little movement, reflecting market caution amidst the inflation data. US stocks sold off with the DOW dropping 1% and the S&P 500 and Nasdaq both shedding just under 0.5%.
U.S. stocks sold off on Thursday with the Dow dropping 1% and the S&P 500 and Nasdaq both shedding just under 0.5%. Disappointing guidance from Walmart weighed on Wall Street. Its shares ended down 6.5% after forecasting slowing consumer demand. That dragged down shares of its retail peers, Target and Costco. Some big tech shares also took a tumble, including Amazon, Tesla, and Meta Platforms. Among other movers, Palantir Technologies, which provides government-related software, shed more than 5% after a Pentagon announcement on Wednesday that it was looking at potential budget cuts for the fiscal year 2026. U.S.-listed shares of Alibaba Group gained 8% following the Chinese e-commerce firm's consensus-beating third-quarter revenue. and toymaker Hasbro jumped nearly 13% after beating quarterly profit and revenue estimates.
French car maker Renault reported a recording operating profit, beating expectations as lower costs and a string of new launches boosted margins. Mercedes-Benz, on the other hand, reported a 40% slump in its car earnings for last year.
Renault swung back into profit last year, reversing 2 straight years of losses. The French car maker reported Friday a group share of net profit of $1 billion, well above analyst projections. Its operating margin of 3.6% was above the automaker's own targets. It also put Renault 2 years ahead of its so-called Renaulution revitalisation plan. The results come after the start of a big restructuring to lower fixed costs. The company also refocused on its most profitable car models and markets. Renault put the successes down to the firm's strategy of value over volumes and strict financial discipline. The strong performance means Renault now plans to repay state aid received during the health crisis ahead of schedule. Renault had already repaid around a quarter of the $4.5 billion in loans it received. It now plans to repay the rest ahead of the 2024 deadline. Renault also confirmed that EVs are the future for the company. It wants the brand to be fully electric by 2030.
That's all from us on the Nightly Business Report for today. We'll see you again on Monday with the latest updates in the business globe. Until then, I'm Salimutha Nayaka. Thank you for joining and have a good night.